Hello, all. This is another financial statement regarding an interior design studio that one of the students submitted. And here is what ChatGPT is creating for financial statements, and it makes some assumption because it doesn't know how much busy but I was impressed in certain things. I'll tell you what they are. An interior design business comes with design fees, which is the major component of their income revenue, and that is $60,000. And they sell products like furniture, and they consult. Therefore, they give ideas, and therefore the total income is $120,000. And these are in 1 year. I'm happy it writes in 1 year, which means if it is 120,000, you could quickly guess that this business has $10,000 a month in revenues, because you multiply $10,000 by 12, that is 120,000. 10,000 again, you can think about it as something as $300 a day, for example, $330 a day, 7 days a week. That gives you $120,000 a year. Now, this business has COGS, cost of goods sold. It has to buy furniture to bring it and sell it to people. That's $25,000. Then there are items for decoration. That's 15,000. Therefore, in 1 year, this business has purchased $40,000 of materials, and they subtract this one from 120 to get our gross profit. Then we come here, and the rent, you see $12,000. Guess what? ChatGPT, guessed and knows where Petersburg, West Virginia is. Because if you had said that I want to open this one in New York, downtown New York, then suddenly you would have seen numbers would have been way different. Your rent would be $20,000 a month. Therefore, it knows that 12,000, that means $1,000 a month. Utilities, wages and salaries, $30,000. Advertising and other costs, professional fees that you see is what you pay accountants, you pay lawyers, those are, and also miscellaneous expenses. Therefore, these are $57,000. And then here is the net operating income. That means the total income of this business, and operating income of this business is 23. However, we have we have borrowed money, and this is the interest we have to pay, and these are the taxes that we have. These are the taxes we have to pay, 20% taxes, and that is the income in 1 year for this business. It's just is an example. Then we come here, and a statement balance sheet. You will see we have in balance sheet, you always include your cash as accounts receivable and inventory, the furnitures that you have. These are current assets. The meaning of current assets are the assets that you can quickly and hopefully sell them quickly to convert them to cash. They are called current. Fixed assets, you cannot, quickly convert them to cash, but they are still assets, $10,000, furniture, leasehold. Therefore, we have $40,000 of fixed assets. We deduct the accumulated depreciation, and therefore, the total assets, these are the net fixed assets, which is 35. This 35,000 and this $30,000 give us 65,000. That's our total assets. From here, we know that our liabilities and our owner's equity, if they are added together, they are supposed to be 65. These are our liabilities. We have to pay accounts payable. We have bills to pay, short-term loans, and these are the liabilities. We have borrowed short-term loans. And then we have borrowed long-term loans also. Therefore, we add all of them. Total liabilities is 23,000. If you look at here, if you subtract total liabilities from your assets, that's the owner's equity. How much the owner, the equity of owner is. That is $43,000. And if we add this 43,000 and the liabilities, we get 65,000. That's the same as what we had in assets. Therefore, our balance sheet is already balanced. Therefore, this is something we want you to, know about balance sheet and cash flows. Is that we have an income this year? We had an income of $17,000. It's cash. The owner didn't take the money out. They didn't withdraw. It didn't withdraw. We add the depreciation and changes in working capital. $2,000 more came. Therefore, net cash means from operating $20,000, $24,000 were added to our $17,600. However, we use $10,000 to pay for the equipment. That means that's the money out. We paid $20,000 to, for this one, and this is the net cash at negative 30,000. Then we borrowed money. Do you see proceeds from the loan? This added to our cash. Then we paid some payments, and then now we have $13,000 in cash. Let's not forget that if we had not borrowed this $15,000, at the end of the year, we would have been in trouble because we didn't have $13,000. Our cash had gone to a negative 2,000. We would have been in trouble. Therefore, this money, this loan saved our skin. Therefore, we can continue. Net increase in cash, 7,600. 2,400 was, beginning balance, and ending cash balance at the very end, we are going to have $10,000. Therefore, we can continue our operation. Therefore, as a financial advisor or as in personal finance, you always want to look at these numbers. Of course, as I said, these statements, you will see them more in accounting courses. In accounting 1 and accounting 2, and also sometimes in business finance. However, this applies to personal finance as well. As I said, is that sometimes you might want to invest in a business. As a personal finance person, you want to have a good, you can invest in different things. One thing, you might want to invest in a small business. Therefore, it is good to know about financial statements.